And welcome to another edition of the Nerdy Agent Podcast. I'm your host, Luke Pettersen, with both of my brothers this week, which I feel like it's been a while, and my fellow nerds, AJ and Josh. Today, we are going to talk about the hit some real estate agents are feeling within the market and the trending decline of pending sales. What you need to know about that, kind of where the numbers look, what they're looking like, and what you can do to weather this storm while other agents follow the market in order to get to when sales start to increase again and stuff becomes a little bit more favorable for agents. So, but first, the Would You Rather of the week. Josh, did you have one or do you want me to grab one?
Go ahead, buddy.
Well, that one's too easy. Would you rather own a house with an indoor pool or an outdoor pool that's heated all year round? I would like to make a note that if you do have an indoor pool, any negative side effects that you think would come about from having an indoor pool in this scenario, you wouldn't have those.
Do you get a sauna with one of the two options?
They both come with saunas.
Oh, great.
Wow. I would pick the indoor pool probably. The outdoor pool in Minnesota heated all year. That's just like, what? What kind of heat?
So much utility bill that you don't use, right?
Well, yeah, and like what? How hot? Like a hot tub? Why wouldn't I just get a hot tub?
90. Well, it's no. It's
heated.
heated to a pool temperature.
Yeah,
90 degrees. It's gonna break.
Not a hot tub temperature.
No. In
break.
this situation, it wouldn't break.
Where do I live? So many questions. I
Minnesota.
pick indoor pool.
I like indoor. Indoor sounds fun.
I feel like an indoor pool is just a waste of space, to be honest with you. It just seems like a lot of room to give to a pool. I would rather have a outdoor pool with a sauna and, I don't know, just use it in the summer months. I don't want to heat it in the winter, though. I'd rather have it.
That is not an option.
You take your utility bills and you like them.
Indoor pool was the correct answer, I'm afraid. All right, let's get into what actually matters. To start, can you give the listeners, if they don't know, I mean, they've maybe been hearing a little bit about sales declining, what have you, but can you give them an idea of what we mean by some agents right now are being hit a little bit by the decline in pending sales across the market?
I mean, we're seeing, depending on the price point you're looking in, we're seeing anywhere from 15 to 30% drop in pending sales, which leads to closed sales, right? So we look at pendings because it gives us a better idea of the market today. The closed sales will give us an idea about what the market's going to look like in 2 months, for instance. So, you know, if sales are down 15 to 30%, and again, depending on your market, this is just local to Minnesota, that's just less transactions happening at a time when in 2020, real estate got to be a really attractive option for people to get into. So we've added thousands and thousands of agents in our local market and decreased the sales by thousands and thousands of sales, which makes the sales per agent much, much lower than it was back before 2020.
Yeah, I mean, we talk about the market. We talk about the number of sales available for home from an inventory standpoint a lot. We talk about the Fed things that they do and how those impact interest rates a lot, but we don't talk a lot about just how many sales are happening in the marketplace right now. And I think for agents, it's highly important because, as you mentioned, the fewer the sales happen, the fewer dollars people are making, the fewer dollars are available to the full pool of real estate agents. And when we break it all down, I mean, it is a pretty simple mathematical equation, right? However many transactions are happening times the amount that are being made per those transactions or the dollar value of those transactions times whatever the gross commission rates are equals the pie available for all the agents. And then when you compare that to how many agents there are, it kind of helps to determine how attractive this career field we're all in is. And so right now, I think it's important for us to talk about this today, but it's one of the least attractive times in the last 30 years to be doing what we're doing. And that's something that we share with our team a lot, but also help them realize it's not going to be that way forever. So how do you do the right things to be okay today to, you know, be in a good position to be successful tomorrow when it changes?
From a statistical perspective, I just want to make sure I throw some numbers out there. In May 2021, we hit our peak since 2005 May and had 69,000 pending sales and change that month. In 2005 of July, we got to around 69 as well, May, what have you. In June of 2023, we were down to 45,000 and change, almost 46. At the lowest number from the 2008 recession, it got to 36. So trending towards that direction too, actually, right now. That number hasn't shown that it's coming back.
And I think if you uncoupled the data a little bit, what you're working off of is a 12-month trail. Mm-hmm. So as time goes on, if bad months fall off, then it improves. And if good months fall off, it gets worse. Sort of like the inflation data like we've talked about.
Sure.
But yeah, I mean, it's pretty wild how low the pending sales have sunk.
If you think about that, 18,000 transactions, average sale price of, let's just say 350,000 to make it even smaller, at a gross commission rate of 2.7 on average, you're talking about over $170 million in commissions that are disappearing from the marketplace. So that matters a lot to people because that pie has just shrunk, right? There's less to eat, but that doesn't change the fact that there are still a lot of mouths that are hungry at this point in time.
And I do think I was struggling. I was looking up just to give a number before we started on how, because a lot of agents are falling out of this, right? They're leaving the industry because it's just not working the same way it was going to, which you look at, one negative side, sales being down, one positive side, if you can fight through and weather a storm like this on the back end, there's going to be a lot of agents that didn't make it. I couldn't really find any numbers. I was seeing like 60,000 agents left in the first 6 months of the year, which was like 4 to 5%, I think.
Yeah, the tough thing is, at least in Minnesota, and I don't know how it is across the country, is we renew our licenses on June 30th. And so now is when we're probably going to start to see actual numbers of how many people did not renew because we're 3 weeks past that date.
Yep.
So people who didn't pay to renew their license, didn't do their CE or whatever. I'm sure at our local MLS, we're going to be able to figure out those numbers within the next few weeks.
To find them, yeah.
It would be kind of cool to look at and overlay, though, the number of agents that have sold more than X number of houses this year versus X number last year. If you create like a livable number of houses to sell to be a full-time agent, how much has that changed? Because I'm guessing that the number is even more significant than 30. If you were a lower performing agent, you're probably performing even worse than, there's probably the top performing agents are doing their best to kind of stay where they are and everyone else is disappearing.
And I think, and I might be skipping ahead, but in a market of absolute madness, people are far more likely to be moving quickly without thinking through their decisions necessarily as much. Like calling their friend who just got into real estate and offering on a house the next week. That doesn't seem to be happening nearly as much as it was before. And in a market with less sales where, if you have a transaction to hire an agent for, you might be a little bit more choosy now than you were before, which means that the agents that are able to level up and be really actually valuable and good from the buy side or the sell side are more likely to get more of the transactions. So we're starting to see that divide happen too, just within our micro market of, people getting out because they're not getting that business anymore because those clients are going out and searching out better real estate agents to represent them, and they're not making their decision in a 24-hour period of time.
Right. And in a microcosm, we've already seen that within our team, right? So we're up, 21% over last year, and even our top performing agents are all up versus where they were a year ago. So the top performers in the top teams seem to still be succeeding in this market. But the ones that maybe aren't as good are struggling. And I think there's also the component of it's a very unique market in the sense that the sales are way down, but the competitiveness to find a house is still really high. So in the past, like in 2008, sales were way down, but competitiveness was way down. So if you were a buyer's agent and needed a handful of transactions, you didn't necessarily have to have a ton of skills to still have success for your clients. In this market, you're still having to do all the things that you need to do in a crazy market to help your client have success. But at the same time, the sales are down too. So it's like kind of a double dip in terms of why a quality agent's a really important thing to be and have.
So that's a really good important point to make and I think this happened to a lot of people when real estate's easy and there's a lot of sales. I think the agents don't focus enough on what they're doing on the back end to retain the people they're selling houses to because they're just running around crazy, think they're too busy to do any of that. And two, don't spend time to learn more, right? So even though you've sold 100 houses in the last 2 years, you're not done learning about real estate. You're not done getting more knowledge and getting better. And if you're just kind of stuck doing the same thing over and over again, at some point, someone's going to leap you if you don't keep getting better. And so even those agents that were running around, but now they're not getting their past clients anymore because somebody else is mailing them, for example.
Yep.
I want to get into the kind of what the specific factors are that are contributing to the decline in pending sales, just so if the agents don't know, because there's a lot of agents out there that are by themselves, they don't necessarily have the information on what's going on. Why are sales declining, and how can they use the reason they're declining as an advantage to kind of try and gain more sales, essentially?
Yeah, I mean, you can only sell the homes that are raising their hand. I mean, you can sell off market, right? But the majority of sales still happen on the MLS. So you can only sell the number of homes that get listed. And I think that was one of maybe the Fed had this in mind when they were cranking on that interest rate. which obviously caused the mortgage rates to go up, but maybe they didn't think as much through it. And I talked about the other day that real estate's very unique in that it's probably makes up the largest amount of our economy of any single sector just because the dollar amounts are so big. So it's just $1 trillion and trillion dollar marketplace. Mm-hmm. And it's the only one that's big like that. That's almost all consumer to consumer. So even when you look at cars, which would probably be another fairly large factor, that is majority dealership to consumer, right? So maybe 25% of car sales happen, on Facebook Marketplace or whatever, but home sales, while there is a business involved through a real estate agent, the sale actually happens from a seller to a buyer who is a consumer. And when a sale happens in real estate, that money usually that happens from the sale gets used to buy another property, right? And when you make the mortgage rates so expensive, the seller thinks about buying and they think, okay, if I were to make this decision, Josh talks about best alternatives for people all the time. If I were to make this decision to sell my property, I have to buy something new or I have to participate in the rental market, which is not much better right now. And so I'm just going to decide to keep my good mortgage rate, maybe remodel my house, maybe just wait out the next 3 to 5 years and see what happens. And so that's leading to a large decrease in listings, which then just has to lead to a large decrease in pending sales.
Yep. And that's impacted different segments of the market more effectively. So, we've talked about the first-time home buyer market is still relatively competitive because if you're buying a first house, you're comparing renting versus buying. You don't have anything to sell. You don't have a low mortgage rate. So it still looks like a pretty good option for you. So that market's still competitive, but there's no listings there. So therefore, it's not necessarily pushing as fast. The higher price point homes are a little trickier because to AJ's point, most of those buyers are also sellers in the lower markets. And so they have the low interest rates. They're not putting those lower priced homes on the market because their alternative is to essentially double or triple their payment to move up into a higher price bracket. And that doesn't look like a very attractive option at the moment. So with the big change in interest rates, AJ's right. That's been the one massive thing that has caused this kind of impact that we're seeing. And not to, I guess, jump ahead too much here, Luke, but that's the main thought process.
So I want to talk about what they can do, right? And I have a few things off the top of my head. So what we're saying is, right, rates go up. There's less buyers because rates have went up. There's less people just selling and moving up to buy new houses. Mm-hmm. And there's less people making these decisions quickly and without all the information, right? So in my opinion, the hardest thing for agents right now to do is to be in front of somebody that's actually looking to transact real estate. Mm-hmm. So like historically, it's like 3% rates. I'm at a gathering. 2 people want to buy a house. My past client's looking to sell their house and upgrade. Now that we're at 7%, you're at that gathering, and the people who you've already sold houses to are going, I'm not going to move, right? So you can work your sphere, which I think is still smart. You should understand where your past clients are at in their life. If they're getting engaged, if they're having kids, what that looks like, any sort of life event that might make them change outside of thinking about real estate interest rates. However, the other thing you can do is put all of your attention into how you can get yourself into situations where you're in front of people transacting real estate. The biggest one that I can think of off the top of my head that you can just go and do, depending on your access to listings, is open houses. Mm-hmm. The people who are walking through open houses, your friends, right? We talk about this a lot. Your friends, if there were 6 of them last year, 3 of them were looking to buy houses. This year, 1 of them is, right? So you just go to that number just automatically decreases, but every single person who walks through an open house has actively been thinking, I'm looking to buy a house, right? And they might be looking to sell a house as well, what that looks like. The other thing, based on what I'm hearing here, and this one's not as accessible, and I know we're biased because we're on a team that does a lot of lead generation, but now is the time to suck up your pride and get onto a team that actually can give you opportunities. Because if you don't do that and you don't have sales to get through the next 2 years, you're not going to be in the industry.
You'll be one of those agents that's getting out.
Exactly. You're going to be one of the 5 to 10%, I think, is what I'm probably seeing in 2023.
It might be a lot more than that.
And that's the thing. But 4% up until the first 6 months where we haven't seen the renewals yet. So it could be a lot more than that as well.
We are already up from where we were in 2020 by 150,000 agents, right? So we got another 10% have joined the industry since the market started looking nice. Now the market's down 30% from those timeframes. it's not crazy to think they will lose 30% of the agents in the marketplace.
You need to increase your opportunities. So
Yeah,
whatever
and
you
I
think that might be.
And I think we've talked about this before, but it's how do you think about your business in more than just 12-month increments, right? So think about the things you need to do for the next 5 years. Luke mentioned, that whole party atmosphere, talking to friends. I like to think about my sphere of influence or the people that might transact with me that are in a friend group or a family group or whatever, less as clients and more as just people that know what I'm doing. So as long as I'm just being thoughtful about trying to positively impact someone's life however I can without any sort of expectation of a real estate transaction coming out of it, it will pay itself back at some point in the future, right? So not thinking, should I talk to this person because maybe they'll buy a house with me in the next 12 months? It's no, I genuinely like this person, and if I can have a positive impact on their life, that's great. And if it comes to something in the future, then it comes to something in the future. But the more people you talk to, the more people will be aware of what you're doing and the more people will be wanting to root for you. And I think that's something to not lose sight of, especially when things are slow. But you do have to also keep the boat afloat. So to Luke's point, finding things that will help you survive for the next 12 months will be really, really important. Now, the thought, though, is in 2 to 5 years, if we're going forward, right, if the market's down 30% now, it's not down because there's a lack of people wanting to transact real estate. In general, they're not wanting to transact real estate in this specific marketplace because of the way the interest rates are affecting their decision making. But there is going to be a glut of people that want to do something. And so if the interest rates change in a way that creates an opportunity for them to do something, they're going to. So I think that's the key message to leave for people is like, if you can survive 2 years, there's going to be a huge backlog of people that want to get out there and there's already people wanting to buy. There's going to be a lot of people wanting to sell, but they just can't in the current environment. And so if the environment does change, and there's no reason to believe it won't ever change, that is going to create a very significant impact on the ripple on the whole marketplace. And so surviving for 12 months, surviving for 24 months, you might see, okay, we're now down 30% in real estate agents and we have 1.1 nationwide instead of 1.5. And transactions now are up 20, 30% over a year ago. And prices, by the way, as a real estate agent, you don't realize this, but you get the benefit of all this inflation that's been happening because your commissions are tied to the sale prices. So when the market inflates 10%, you get a 10% raise that year. So all of those things create an environment that looks really nice 3 to 5 years out, but is really poor right now. And so how do you, to Luke's point, if you can suck up your pride and take leads for 2 years, you create a new sphere of influence, you make a little less money on those deals, but you survive, and then all of a sudden in 3 to 5 years, you can crush.
When I got into the industry in 2018, one of the big things that agents love to talk about were the ones that made it through that 2008 recession. The broker at our brokerage we started at was one of those people, and he talked about how he just grinded. He was walking around door knocking, canceling expireds. He was leaving notes. He literally did everything he could possibly do to get through that time. And when he got to the back end, the whole thing exploded because there were tons of agents who were gone. Sales increased drastically, and people appreciated the fact that he got through that, right? In 10 years, we're going to talk about the agents that made it through the 2020 to 2023 chaos, is my guess.
Yeah, absolutely.
And so I just want to, before we get going, I want to give some forward. You said forward looking already in the next 3 to 5 years. One thing I want to point out, I was meeting with our financial advisor, who's all three of our financial advisors as well. Shout out Alex. And I asked him, because he's the one that we trust to give us like input on where things are going, and he's pretty unbiased and pretty logical about it. I asked him where he thought rates were going to go in the next 2 years, and he said in 12 to 18 months they're going to be 5 to 5.5. Almost put his hat. I'm not going to put him under the bus if it doesn't happen because we don't have an 8 ball, but he was pretty sure of it.
Yeah, so his thought is that once the signaling happens, he talks a lot about rate hiking cycles and when they pause or when they signal a pause, what happens to treasury yields in the bond market. And it came true this time around is that the 10-year started to slip. It's now back up a little bit, but when you look at it over a wider period of time and other periods where they raised rates and then they stopped or when they signaled they were going to stop, leading up to that stop period is when that bond market got super, super active and liquid. which causes the 10-year yields to drop. So he's anticipating that yield coming down under 3 even potentially within the next 12 months, which will be interesting to follow. Nobody, like Luke said, nobody really knows.
You say under 3, just to be clear for all listeners, that's not the 30-year mortgage rate. That's the 10-year.
10-year treasury yield.
And how does the 30-year typically base off the 10?
Right now it's running about 300 basis points above it, which historically is insane.
Just 3%.
Yeah, which historically is insane. For
Way
the
higher than
2013 to 2019, it was running about 1.4 to 1.6. So that's, I think, what he's talking about is like when that yield comes down, when the spreads come down, when the lenders get a little bit more comfortable, the rates could drop even without the Fed dropping the overnight rate. Now, if the overnight rate stays at 5.5, it's hard to see a world where rates are in the 5s, in my opinion, just because that's the amount of money the banks have to pay to get the money, right? So I think we're going to have a market that's not too dissimilar from today for several years now. Or to your point, until the rates get into a better spot, or the builders really start ripping off on builds, which shout out to another podcast we did on builder confidence. That's starting to happen, but we're just millions and millions of homes short of what we should be in terms of what's coming to market.
If rates get to 5 to 5.5, though, the people there's a lot of people on the sidelines at 7% that would transact and move up. They would, because it's not going to get back to 3. It's not going to get back to 3.5. And they might be in a position where they rent their place instead of selling it and moving up. They might just move up and rent it. Another point there to make sure that you're not getting commission breath, you should be mentioning that to all of your clients at 3 to 3.5. That'll make you sticky. Just saying, hey, you might just rent your place and move up. Then the rate doesn't really matter as much.
Commission breath. I like that.
Commission breath. Don't get commission breath. Find opportunities. You're going to have to grind for a couple years, but the back end is going to be sweet.
Can I just mention one more thing? We talked a lot about different strategies you can use, whether it's joining a team, whether it's just getting leads on your own, going to open houses, talking to your sphere. None of them should be done by themselves is the biggest thing that we try to encourage our agents on. So you should do all of them. And there is time in the day or a 40 or 50 hour work week to do all of them. Yeah. And I think the big nugget that I think Luke touched on was it doesn't have to be, maybe it was Josh actually, doesn't have to be somebody who's looking to do something in the next year, right? So we talk often, if you saw somebody in the grocery store, would you say hi to them? If so, add them to your CRM, take them out for coffee, see how their life is, ask them questions about their family, see what's going on, because that's going to give you the best chance that when they want to transact or they're talking to somebody else who wants to, that they're going to refer you. So never lose sight of that. And I think to the point you made last, those are the agents that are doing those things that are going to really, really benefit in the next 5 years.
Love it. And that's all we have this week for the Nerdy Agent Podcast. As always, remember, be better